How much exactly and in what specific way does an early investor in a company earn? Let's take a moment to clarify these terms. For an early stage investor, and indeed for investors in general, profit is first and foremost the steady growth in the overall value of their investment portfolio with the eventual possibility of making a successful exit, that is, the fundamental ability to sell their portfolio at a significantly higher price. Typically, such lucrative opportunities arise in several specific cases. When a company finally goes public, everyone understands this standard process. It's a public offering of securities or perhaps a public tokenization. And when you enter the open market, you can sell your portfolio, provided, for example, that there are no restrictive vesting periods, lockups, and so on. The second major opportunity is a Series A investment round, or generally speaking, rounds of other subsequent series. What does this actually mean? It means, for example, that you invested in the company at the very earliest stage possible. The company grew, achieved certain impressive results, became quite noticeable, and then a strategic investor comes in. This could be a large corporation that wants to buy a part of the company, a technology portfolio, or anything else that might interest them. And one of the primary conditions of this deal would be the opportunity for early investors to sell their existing portfolios. Naturally, this is done based on a much higher valuation than the one at which you originally entered. So at the early stage, you buy cheap. At a later stage or the next stage, you sell at a higher price. And in the specific case of IT companies, in the case of commercially successful IT companies, you sell at a much, much higher price. This is the main principle for any investor. What determines the actual size of your profit? Naturally, it's your specific entry point into the company. The earlier you make your first investment, become a co-owner, arrange a flexible installment plan, and, for example, pay it on time and receive all the bonuses, various promotions, and so on, the more securities you have and the greater profit you can expect when the opportunity for an exit arises. So, become co-owners now. The nearest date for such a major exit is, in fact, the completion of the bridge round, and it will be completed when there is either an IPO or an IDO, a public offering in various forms, which could be in the form of shares or digital tokens, or a Series A round. We are leading the company in that specific direction, and that's why the bridge round has now been launched, and we are gradually mobilizing resources and bringing products to market. These include fintech solutions, which I mentioned above, as well as gadgets and various infrastructure projects united by the fields of artificial intelligence and blockchain technology. If the planned goals are successfully achieved, your potential growth from the current value could be 200, 300, 400, or even 500%, depending on your entry point. And if you are an early investor from previous years, then even much more. As I said, it all depends on your entry point. The expected date is in 22 months, the first or second quarter of 2028. In fact, the topic of investment payback, investor returns, and the ways to realize those returns generated the most questions from our audience. Of course, we expected that the questions would be more about products, technologies, and the market. But overall, it seems that everyone is thinking about their own benefit and the possibility of getting a return, a profit, and a significant profit on their investments. So let's talk about that in more detail. One of the most frequently asked questions is this.